Monday, March 2nd, 2021, Maneko 64, home of alternative economics and contrarian views. Today we're going to look at how Comical Yellen is trying to tell everything's fine while an inflation tsunami approaches. And I'm going to reference a really great video from Body Language Ghost on YouTube. Body Language Ghost analyzes an interview that Janet Yellen gave to the New York Times. And I'll play a little clip here of the interview from the video, and you'll see what I mean. So let's start.
Actually, the opposite.
Treasury Secretary's job, in some ways, could be considered to be the top salesman for bonds in this country. When you think about the bond market and having to sell that debt to the public, how do you think about that?
Well, of course, a key job for a Treasury Secretary is to make sure our country is on the sound fiscal course. And look, if you don't spend what it's
So she's watching what she's saying. She's gated.
necessary to get the economy quickly back on track, that has a fiscal cost as well.
So there you go. That's the typical Keynesian fallacy that if you don't spend, you can't get the economy running. Somehow the economy is different than the individual. If you ever were in fiscal or financial trouble, would you start borrowing again and start spending? No, you try to maybe get a better job, get a pay rise, work harder, save. That's what you would do. But the Keynesians, of course, they always think the solution is to keep spending because it's not their money. So I've been talking about the inflation danger. Of course, there are those who think we're going to have deflation, which is, in my opinion, crazy. And I'm not the only one who's saying that now. We've got people like Warren Buffett who warned about bonds being a bad investment to his shareholders in his latest letter to them. We've got John Malone, who is the CEO of Liberty Media, one of the richest Americans. He was talking about this back in November last year already, how he's been buying hard assets because he didn't want to use the term inflation, but he said currency debasement, which is the same. We've had Paul Singer talking about the dangers of inflation. We've had Michael Burry of The Big Short fame, the man who saw the bubble in the subprime real estate market back in 2005 and 6, and made a fortune, of course, for his investors in the '08 collapse. He's saying now that we're facing Weimar hyperinflation. And he tweeted last week, and he said, "Don't say that I haven't warned you this time." And we've also got even an uber Keynesian by the name of Larry Summers. Larry Summers was the last Secretary of the Treasury under Clinton. Bill Clinton, of course, Bill Clinton also had Robert Rubin, who was a former Goldman Sachs guy. I, to be honest, don't respect Larry Summers that much. He's a Keynesian, of course. I think he lost billions for the Harvard Endowment Fund as well. But he always seems to be called upon by the mainstream media to give his ideas. And even he is saying that we face the worst inflation in 40 years. And at the same time, though, he says, I'm not calling the Fed to rein in QE. I'm not calling the Fed to raise rates. So this is how it's going to be. Have you ever wondered how they're going to keep things fiscally going without raising too much taxes? Because they can't raise taxes too much, even though there is talk of tax rises, not only in the US, but in the UK. What they're going to do is they're going to keep rates And by rates, I mean the very short-term rates, the overnight rate that the Fed and the Bank of England control. They're going to keep that near zero, but they're going to try to control, of course, longer term yields with QE or yield curve control. Well, yield curve control is basically QE, because they're going to find it very hard to get the market to accept those rates. So they're going to have to be increasing QE. But if you look here, and I assume that Larry Summers, being a Keynesian, is talking about inflation as the CPI. So I've got this consumer price index data from 1913 to 2021. So if we scroll here, let's say 1981, right, which is 30 years ago or 40 years ago, sorry. Larry Summers is saying we're going to get the worst inflation since then. So if we go forward from 1981, we've got years where you got 3.8, 4.4, 4.6, 6.1. So what are you saying? We're going to get inflation or CPI worse than 4%, maybe worse than 6%, and rates are going to be kept near zero. And you can bet they're going to try to keep these longer term yields near to 1 or 1.5. And all that's going to do is eat away bond investors' capital, because if they're running CPI at 4 or 5% and rates are at 1 and 2, you're losing money on a real basis. And I would say as well, the CPI doesn't even really reflect the real rate of price increase. This is doctored to look even better or even lower. So yes, why the reference Comical Yellen? Well, I'm old enough to remember the illegal invasion of Iraq in 2003 by George W. Bush and Tony Blair of the UK, who was at the time Prime Minister. George W. Bush was president. We won't get too much into that, but the point is that there was this Iraqi government spokesman, Comical Ali. It says the invasion of Iraq in 2003 was memorable for the rantings of the Iraqi government spokesman Mohammed Saeed al-Sahaf, better known to British audiences as Comical Ali, and to those in the States as Baghdad Bob. This babbling clown would appear on TV every night, cheerfully explaining away defeat after defeat. I also remember him on CNN. I think it was the day that American troops were approaching Baghdad for the first time. And you could see the tanks behind him coming into Baghdad. And he said, oh no, we're going to win this war. Yes, the Americans are we're going to kick them out of here. And you could see the tanks. And it's the same thing that's happening right now. We're seeing all the commodities rise. We're seeing everything go up in price, and we're being told that everything is fine, especially like by people like Janet Yellen and Jay Powell of the Fed, that inflation is at 1.5%, even though most people in the real world can see the tanks, right, coming behind them, so to speak. And it's crazy. So that's why, do you really want to hold bonds in this environment? Do you want to hold the monetary metals that have protected people throughout the ages against the debasement of currencies, even against deflation, even in a deflation, which we will probably get, but not now. Gold and silver protect you. Is it any wonder that the bullion banks are trying desperately? And you have to understand, these bullion banks, they work together with the U.S. Treasury, with the Fed. They're part of the same club. I mean, I heard that Citibank or Citigroup yesterday saying that Bitcoin is going to be a reserve currency. I mean, that might be true, but couldn't they have also said, gold has been the reserve currency par excellence for 2,500 years. Empires are built on gold, right? The Roman Empire, the British Empire, the American Empire was built on gold as well, and they fell because they drained all their treasury, and they went on money that was debased. No, but Citigroup, of course, they probably have a big short in gold and silver, and that's why they're spewing out things like that. I really recommend you watch The Big Short to see how the psychological warfare on Wall Street works, how they're probably trying to close their shorts in the metals right now by saying things like Citigroup is saying that Bitcoin is going to be the reserve currency, to take your attention away from gold so that they can manipulate the paper price lower so they can cover all their shorts before the inflation tsunami. So that's what they're doing. Someone asked me a comment. They said, I've watched The Big Short 3 times. Is there something they're hiding about Wall Street because it's a Hollywood production? I would say no. It's quite a good movie. It's the right message. What they're saying. Yes, they might have avoided some other parts of the crisis, but no, I don't think there is. So with that, let's quickly look at where the markets are this morning. It's 8:38 a.m. London time. Yes, very frustrating. It's a bit like Comical Alley. The bullion banks are behaving like Comical Alley. They're saying, oh no, gold is no good. Gold is going down, the paper price. And you can see in the background, the whole public trying to get gold and silver, and there's no gold and silver. So the bullion banks are Comical Alleys as well. They're Comical bullion banks. and the price that I'm going to give you here, the spot price, is a Comical price. So right now, spot gold is at 17.20, down just about $5. The high's been 17.30, the low 17.07. Do you really want to part with your gold and silver when you know that inflation is going to be running, or CPI is going to be running at least at 3, 4, 5, 6, or maybe even more than 7%, according to Uber Keynesian Larry Summers. Silver is down 48 cents, 26.08. High's been 26.70, the low 25.81. I saw that the CFTC wants to investigate retail investors in the silver market, which is ridiculous, really. And that's why you just have to stay out of the futures or ETFs. Just buy physical, because they don't regulate physical markets. If people don't realize that the CFTC is basically an arm of Wall Street, they must, I don't know, they need to sort their heads out or something. That's all I can say. The Dow future down 70, but well, yesterday, I don't know, it was up 700. So crazy paper markets, crazy asset markets. NASDAQ is down 44, S&P down 11. We've got the pound down about 0.2%, just around 139. The euro is at 120, down a third as well. So the dollar is a little stronger. But as I've said many times, all fiat currencies are going to go. It's not just the dollar, all of them, everywhere around the world. The dollar is up slightly versus the yen, 106.87, and the dollar is virtually unchanged versus the yuan at 647.50. Copper is down 0.1% at $4.10, and crude oil was down quite a bit. Actually, we've come off. We're at 60 now, down 0.75%. I'm sure the Treasury, Comical Yellen, she's got control of the Exchange Stabilization Fund, which was created in 1934 after the government had confiscated Americans' gold. They revalued the price of gold from $20.67 an ounce to $35. With the profit, they created this fund to manipulate the markets. So what a great deal for the American public. And Janet Yellen now is in charge of that fund. So you can bet she's giving orders to JP Morgan to manipulate everything at the moment because they're desperate that investors are waking up to the inflation. So what about the 10-year yield? We'll finish with that. Well, it's still above 130, which I said was a key level. We're at 143. It's down just over 1 basis point. So yes, some people think that yield curve control has been implemented already. I'm not too sure. I think they will come out and announce it. That will have a big impact. That will probably drive yields even lower. Just the fact that they're going to announce it. Or they could announce more QE or increased QE. Right now, I think they're doing 120 billion a month. And according to Jay Powell, of course, the increase in the money supply that we've seen, M2, in the last 12 months of 25% is not inflationary, nor is the increase of over 300% in M1. He's another comical guy. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.